Resume. Okay. Okay, so today we're talking about trading psychology. All right, that's what we've got today on our topic, because as a trader, it is one of the important things that you need to note and understand when it comes to trading the markets. Because there's this thing that says that where do I get my pencil? Okay, when it comes to the trading, in your trading journey, all right, you have this circle like this. Now in this circle, you have this, and you have this. All right, here you have 60%. Here you have 40%. And here you have, here you have 60%, all right? And then here you have, let me clear this. Here you have 20%, or should I even call it? Okay, here you have 20%. Okay. All right. So when it comes to your trading journey, you have 60%. You have your trading lifestyle divided into 3. Okay. One part of it is 60%, another is 30%, and another is 10%. All right. All in sum total of 100% as a trader. 60%, 10% is your strategy. All right. Your strategy is 10%. 30% is your risk management. Why 60% is your psychology. Now you would wonder, why is that so? Like, why can psychology take all the way 60%? We'll start by talking about your strategy. As a trader, it is very important that you have a strategy. Before you enter into the markets with your real money, you must make sure you have what? A strategy. Mr. Edson, please, can you hear me clearly? I just want to be sure, because I think others are having network issues. I hope you can hear me clearly. Hello, Mr. Edson, can you hear me clearly? Please turn on your mic and just speak to me quickly so we can rush up.
Yes, I can hear you, sir.
All right, thank you very much. So 10% is your strategy. As a trader, you must always make sure before you enter any markets, you have a strategy. If you don't have a strategy, you're automatically a gambler. That is, you want to gamble against the markets, because that is, you're just trying to predict, oh, it can go here or it can go there, or you don't know where it's going. All right, but that's not how it's meant to be.
This network is.
All right, that's not how it's meant to be. You're not meant to enter the markets guessing where it will go. You don't guess, you predict. All right, and what makes you a real trader is that out of all your prediction, at least 60 to 70% of your prediction should always go well. Okay. Now, when you analyze your markets and you're about to find your entry, what warrants you to find an entry? What warrants you to take that buy or that sell is what? Your strategy. Because you know within yourself, you know all your confluence, you know all the things that you need to look out for before you take an entry. You understand? So because you know all your confluences that you ought to look out for, and make sure you list all of them and see that at least if you have up to 5 confluences and you want to make sure that at least 3 to 4 aligns, and if it aligns, that is you doing what, using your strategy to trade. So it is very simple to really have a strategy, create a strategy within yourself. It's all about what you have learned, which I have taught you all already. Okay, I've taught you all up to 7 confluences. So it's just all about you putting these things together, and then you look at the market and see which of these strategies or which of these confluences aligns together almost all the time. You can begin to sieve it out, because you know having crowded things is not worth it. You need to filter it for you to be able to know, okay, this one is this one. This one works well. This one works more. This one works almost all the time. All right. Then when you filter it, you know the one that you can say, yes, this one is a perfect one for my strategy. Like for instance, let's say you have candlesticks, you have chart patterns, you have divergence, you have your psychological level, you have support and resistance, you have as many as it. Then you begin to filter. Whenever I look at the market, whenever I analyze the market, which particular confluence do I see more often? Out of it, I want to see if I can see about at least 3 to 4 or even 5 latest out of all these confluences. When you see the 5 that works more all the time, you bring it in and say to yourself, okay, let me establish this one as a strategy. All right. So it's not hard for you to establish your strategy. Now, when you've established it, all right, the next thing that comes out is what? Your risk management. Your risk management. Why is risk management carrying 30%? Because this is about your fund. This is about your hard-earned money. You don't want to lose. You want to win. But having in mind at the back of your mind that loss is inevitable in this market, that is why your risk management have to play its game to make sure that not that you don't lose, but you don't lose more than you win. So now you're trading with a strategy, 10%, and you're using risk management, 30%. All right, to manage those funds. You know, a lot of traders always want to focus more on what they want to get than what they have in their account, but that's not how it's meant to be. As a trader, you have to focus on what you have in your account, how to protect it first, because it's when you have money in your account, you can actually trade the market. And if you don't have any money in the account, you can't trade the market, and you know that for sure. All right. So you want to make sure you protect what you have in your account. And as long as you're protecting it, you can be able to face the market at any time, at any day. I hope I'm communicating. So your risk management is very, very, very important. So number one, don't trade the market if you don't have a strategy. Don't trade the market if you don't have a strategy. And number two, once you've gotten a strategy that warrants you to enter the market, do not joke with your risk management. Very important. Now, finally, number three, your psychology. Now, this is one that plays the huge role, because psychology deals with your mind. Psychology deals with your emotion. Psychology deals with your character. Psychology deals with how you react, how you behave in the midst of the markets. All right. Now, you've entered the trade, you've placed a sell, price is going. Your psychology has a role to play why price is going in your profits. Your psychology has a role to play if price starts turning. Your psychology still has a role to play if price is at your key level, at your entry point. Your psychology still has a role to play if price goes against you. If your stop loss is here, your psychology still has a role to play if price is getting close to your stop loss. Like it's not enough, your psychology still has a role to play if price is getting close to your take profit. Now you see the reason why psychology plays a 60% rule, because it has a lot of things to do with your mind, your emotions, your behavior, your character. Now let's talk about your behavior. How do you behave when you're in markets? How do you behave when price is going in profit? Are you the kind of person who is like, oh, you're celebrating already? Yeah, it's going in profit, it's going in profit. You shouldn't be celebrating when you're still in the trade, in a running trade. You can only celebrate when you close that trade. If you're still in a running trade, you shouldn't celebrate. You know why I say so? Because if you start celebrating when you are still in a running trade and price starts going against you, that heart of celebration might likely start getting damaged. You get? Yes, because there's nothing there's nothing bad as I celebrated now and the next minute I'm upset. So you don't celebrate when you're still in a running trade. Yes, it's going in profit, good. Only celebrate when you've closed it and you know you've closed in profit or even in good profits, then you celebrate. All right. Well, now, what if price started turning back against you? How do you react? This is where a lot of traders would be like, man, let me just run out of this trade, and they just take out like 2 cents or $1 and leave the markets out of fear, only to see price end up coming back, going in profit, and they'll be like, man, okay, should I just jump in? And if they jump in at the middle of the train, which who knows if that's when price will start going back against you. Now you took only $1 from here. Now price started going back against you, $2, $3. So how do you behave when price went in profit for a while and starts coming? How do you deal with that? Now there's this strategy that I use, and that is what in my break-even strategy, I only break even when price has gone at least 10 to 15%, 10 to 15 pips. Sometimes I can decide to say, okay, 20 pips, but at least 10 to 15 pips is enough for you to break even. All right, 10 to 15 pips is enough for you to break even. If price goes 10 pips in your favor, just break even. Because if price decides to turn back, all right, it might likely get back to your entry points. So it's good the price got into your entry point and hit you out of your little break even, which at your break even, you should of course know that you should take little, it's going to take you out on little profit, little or no profit, right? So it's better price came back against you, hit your break even and took you out. All right. And since price is still at your key level, because as a trader, you should know that you don't take trades anywhere. You only trade from your key levels. So since price gave a U-turn and came back to your key level, you still have the right to look for another entry. Because why? Price is at your break even, which is at your key level. Okay. So you still have the right to look for confirmation, trading confirmations again to take another entry if you see a confirmation that is proving that it's going to go down anytime soon. All right, it's better that way than price is still on its way. It hasn't even gotten to your entry level and you take profit out of it out of fear already. These are the things you need to start learning how to arrange psychologically. All right, as a trader, don't exit a trade, a premature trade. Instead, set break even, let price hit your break even so that you'll be sure that price came back to your key level that warrants you to look for another entry. If price did not get to your key level and you exited, you have no right to look for another entry because it's not at your key level. And that place, who knows, it might be far away. And if you set your stop loss might not be in a safe zone. The reason why you take entry at key level is for your stop loss to be at a safe zone. For instance, you have resistance. You take your entry here and your stop loss above resistance. That is the reason why you take a trade. Your stop loss should be above your key level so that you're going to be sure that your stop loss is safe. You get? So if you exited a premature trade that was somewhere here and you exited from here, meanwhile, this was where your entry is. If price decides that this is where it wants to start turning back from, you don't have any right to take an entry here because even your mind would be at fear. If I take it, will it go? But you can only be confident if it got back to your key level and hit your break even. Then you know that, okay, since it's at resistance again, let me see if I can see any bearish confirmation that will warrant me to take this entry again at my key level. The same thing that warranted you to take the first entry at this your key level should be the same thing that should warrant you to look for another entry if price is at your key level. I hope you guys are understanding this logic. So don't trade from anywhere because this thing deals with your emotions. So you have, for you to be able to arrange your emotions well, only play games with your key levels so your emotion can be at peace. If price goes 10 pips in your favor, set break even. Or 15 pips, set break even. All right. What if now the next question might be, what if it has gone just 5 pips? Should I set break even? If it goes 5 pips, leave your stop loss where it was. It might end up going 5 pips and come back into your entry point and probably play around before it will hit your 20 pip stop loss. it might come back going. The thing is that before you took this entry, you're ready and you've agreed within yourself that yes, I'm willing to risk 20 pips. So you went 5 pips in profit and came back, entered you entered your entry point, started going upward. You have already made up your mind that you're really willing to risk 20 pips. So let that made up mind remain stick. So have the belief that your stop loss is on the safe zone. It might end up coming and go back. All right. 5 pips is not enough for you to set a break even, because price needs up to 10 or 15 pips to space to play around. You don't want to give price a tight move. That's the logic as a trader. All right. So that's how to deal with your emotions when price is in a bit profit and coming back to your entry level. All right. Now, what of when price has gone deep down? Now, there's another psychology that plays around when price is close to your take profit. Traders will be like, should I take profit and leave? Or should I leave it running? And you see traders, it will hit their take profit and start coming back upward. And they'll be like, man, I believe it will continue to go down. How do you deal with that? For you to deal with that kind of emotion, since price has hit your TP1, your TP1 probably, that's why I told you guys, if you're trading, don't go for anything less than 30 pips and above. Since you're risking 20 pips, you should target trades of 30 pips or even 40 pips. So any trader cannot offer you 30 pips, don't go for it, just leave it. All right, unless you're willing to risk 10 pips to go for the 30 pips or the 20 pips. All right, so for instance, if you are targeting 40 pips and price hit your take profit one, let's say your take profit one is 20 pips. All right, now you move your stop loss to break even when it was already at 10 pips, and now it went to 20 pips profit. Your break even, you should move it and cover at least 10 pips. Now price is already plus 10 pips to your take profit. So if price end up going to your TP2, which is your target of 40 pips, what you want to do at that junction is move the stop loss that was covering 10 pips and cover 20 pips to see if, so now you're still giving price a 20 pips space to move around and play around. So price might likely hit your TP2 and start going back, looking for space to play around before it continues to go. This is how people catch 50 pips, 60 pips, and 100 pips in a day. So you have to give price that breathing space. So if you have been able to catch at least 20 pips of profit and you cover 20 pips of profit, don't be so greedy, or don't be so stingy with the market that you want to put your stop loss very close to price, but you don't want to lose much. No, give it a 20 pips breathing space. It might likely play around and continue to go in your 30 pips, 40 pips, 50 pips, and even 60 pips. People catch 200 pips a day. It's possible. You understand? This is how they give space to the markets. So, but it is not easy for a trader to really do such kind of a thing, but unless he trains his emotions, unless you train your psychology. That is why I'm teaching you this. Learn to train your psychology. Don't be stingy with price. Give price breathing space with enough pips. Even if you have achieved just 5 pips, give price at least 10 pips or 15 pips to play around. Even if it comes back and hit your stop loss and get you out of the market with just 5 pips, appreciate it. All right, appreciate it. These are the things that you need to learn. Number one, you must understand that not every day is a winning day. Number two, some days are winning days. And number three, not every day is a large winning day. Some days you might win little. If you won 5 pips today, it's something better than you lost. It's even highly better than you didn't trade for that day. You make something. So you must learn to appreciate the little pips you make. All right, but give price this breathing space that I've just taught you is very important. This is how you see yourself catch higher pips in the market. Don't be stingy with price. I hope I'm communicating, guys. So don't be stingy with price. So this is how you deal with your emotions. So another thing is when you're in an entry and price is playing around your entry zone and playing around your stop loss, how do you work with it? This is when you see a lot of traders will be like, man, let me just exit, and exit. Price has not hit their stop loss, but they exist like by themselves. Psychology. As a trader, you're already willing to risk. You must be willing to risk what you have, the stop loss you have put there. Say to yourself that, okay, as I'm taking this entry right now, you say to yourself, I'm willing to risk 20 pips. Be willing to risk it. Don't exit it by yourself. Let that 20 pips be hit and you know that you hit 20 pips loss. You have to be willing. Is important because it's how you also deal with your emotions. All right. Don't say, man, it's getting close to my stop. Let me exit. Because this is where you see sometimes the moment you exit, it starts coming and you will get more upset. That's when you see people trying to revenge. So you want to avoid anything that will cause you to revenge by doing what? Being willing to lose what you're risking. That's the market. It's inevitable. Loss is inevitable. But when it comes like that, face it. So the earlier you start learning how to face those losses, it's going to be easier for you to be able to achieve the goals you want to achieve, especially when you start winning the profits. So another thing is you must make sure you're taking trades from the right zones, because it also deals with your emotion. If you take an entry on the wrong zone and it hits your stop loss, it's going to also deal with your emotion. You'll be like, man, who told me to take this entry from here? I wish I knew. I would have waited. This, you start judging yourself. So for you to prevent all those unnecessary things, wait for your key level, wait for the right setup. If price does not get to your key level and start going in your favor, don't force yourself to jump into it. Wait for the next key level. There must be another key level somewhere down. All right. So if price can cross it and retest, look for it and take your next entry. Don't jump into a moving train. These things deals with your emotion as a trader. So anything that will deal with your emotion, avoid it. Be willing to risk what you are, be willing to lose what you have decided to risk. You have $100 account. You want to risk 20 pips. You should know how much it is. It is worth to your account depending on the lot size that you're using. So if you know that you're using a mini lot size, you should know how much a 20 pips stop loss is going to be. That's about $20. If you're using a micro lot size, that should be $10 for the 20 pips. All right. If you want to break it down, probably you want to risk just 5 pips on that 20 pips, then you know you want to use a nano lot size if you can even find it. So these are the things you have to arrange before you enter the market. All right. Arrange yourself before you take an entry. Once you've analyzed your market and prices gradually coming to your key level, start arranging yourself before it even gets to your key level. Okay, my key level is here, price is coming. Now as it's coming, I'm willing to risk 10 pips, or I'm willing to risk 20 pips, all right? I'm waiting. Start waiting for your confirmations. Or if you're an aggressive trader, you already know what I've taught you guys what an aggressive trader is, all right? So as your key level is here, before price is even getting close to it, you're already ready for anything that is going to happen. All right. If you want to set a sell limit, you can set it, or if you want to execute it directly, you can do it anyhow you want to do it. But you should just be automatically ready for whatever is going to happen once I take this entry. Another role that also plays against traders is the emotion to take the trade. Price will be at the key level and they're kind of like, man, should I take it? Should I sell it? Should I sell it? Come on, sell it. This is how you learn and it's how you win. If you don't sell it and it starts going, it will force you to, you'll be forced to jump into a moving train. Your key level should be your key level. That is why you should study key level, very important. So you know how to map out your right key levels. That zone that you know that at least 50 to 60% price will react on this zone. I've taught you guys of that, your key level. That area that you know you're sure that price must react. All right. I've taught you guys psychological level. Psychological level, you guys already have learned it and you already see how price always reacts at psychological level. So your psychological level, you can also use it as your key level. So if you can see a key level drawn out close to your psychological level, is multiple confluence. Maybe you have that psychological level and that psychological level is resistant, and you have your key level drawn on some areas where price probably must have supported in the past, and you draw it out like this and price is coming. That is multiple confluence. You have psychological level there, and that was also a previous support for price, and price is coming to it. Multiple confluence for your key level and your psychological. Be confident to place that trade. Don't be scared. Oh, should I sell it? Should I sell it? No, set it. Put your stop loss right above the key level, because your stop loss is safer now, is above key level, is above psychological level. Place your trade confidently. All right, don't be scared. This is what we call the trading psychology that you need to deal with as a trader. Don't be scared to lose. Don't be scared to lose because loss is inevitable. But the thing is, while losing, make sure you're losing what you plan to lose. Don't lose what you did not plan to lose because that is where it deals with you badly. I'm willing to lose $20. Lose $20. Don't lose more than $20. All right. So before price gets to your key level, you as a trader, you already know how much you're willing to lose. You should know how to do your calculations ASAP. I've taught you guys how to use your trading view to figure out where your entry level is. Since you know your entry level, the moment price gets to your key level and gives you the confirmation you're looking for, and you place the entry. I've taught you guys how to use the trading view buy and sell to long and short to be able to figure out your stop loss level, the price of your stop loss level. You use it, figure out your 20 pips, 200 ticks, grab it out, bring out the number for the stop loss, copy it, paste it on your MT5, so you know that once your stop loss is set, that is worth 20 pips and is what you're willing to lose. So you don't even have, it's not something you should stress yourself calculating with calculator. Using your trading view, that tool, the long and short tool, is simple for you to be able to use and calculate 200 ticks of 20 pips. So the only thing you need to calculate is how much is 20 pips worth to what I want to take on the lot size I'm about to take. That's the only thing you need to calculate. And how do you calculate it? I've already taught you guys the mini lot size, the value of it, the micro lot size, the value of it, the standard lot size, the value of it. Just do the simple calculation. So at every point in time, trader, be ready for what the market is going to give you. The only mistake you don't want to make is taking trades from levels or random levels that you didn't predict, or levels that you didn't draw out as key level. That's the only mistake you must not make. Trade from your key level alone. The reason for key level is because you know that if I set a stop loss above this key level, my stop loss is safe. Or before price will hit that stop loss, it will struggle. That's the reason for key level. If not, there wouldn't have been anything like key level in the Forex market. They would have just said buy from support or sell from resistance. But the reason for key level is in a zone, you know that this zone is going to be safe for me to put my stop loss above it. That's key level. All right. So I believe I must have covered quite a lot. Now you guys should understand this whole thing, psychological thing. All right. And it's going to help you massively if you can just arrange yourself and study it well. All right. These are the things you need to deal with because they are going to deal with you massively in your Forex journey if you don't start dealing with it now. So please let me know if you have any question. My battery is almost short, running low, just 37%. But I know I've already covered what I want to cover today. So tomorrow we're going to be talking about the Pro Firm. All right. Tomorrow we're going to be talking about the Pro Firm, how you can actually take the Pro Firm and how you can actually win this Pro Firm, the things you need to be doing as a trader. So let me know if you have any question before my battery runs down, traders. You can quickly turn on your mic and talk to me if you have any question.
Well, that suits our team.
Well understood, right?
Yes, sir.
Very well. So tomorrow we're going to be talking about the Pro Firm, all right? Because
Yes, sir.
it's very important that you guys know how to work with the Pro Firm of a thing. Because with the Pro Firm, you don't need to stress yourself so much about looking for capital to start your journey. All you just need is just to get little money, about $70-something, and you can buy a $10,000 account. All you just need to do is to learn how to follow the right things that you need to follow, which we're going to talk about tomorrow during the Pro Firm class. The things you need to be doing, things you need to avoid in order for you to be able to win those challenges. Okay, Mr. Godfrey, I think you're having a strong network issue. I'm not hearing you at all. Not hearing you at all. So, you know, already we have covered almost all our syllables because that's how I love to do with my students. All my, in my academy, I always love to cover the syllables even before time. So that the remaining days we just have, you can always use it to ask me questions and anything you find difficult. You can always use the remaining days to ask me questions, you know. That's how I always love to do my class. So any day we don't go live, just have it at the back of your mind that we are actually done with all our syllables. All right. So the only thing that will warrant me to go live with you guys sometimes is if I see that someone is asking me a certain question that I think we need to go live and elaborate on it. You understand? So that is why I want to make sure that as you guys are training yourself with what I've taught you, any place you find difficult, just jot it down. This is gonna be my question. Throw the question in the group. Once I see it and I see that it's something that everybody needs to learn about, we'll go live on it. Okay, that's just
Okay,
what
sir.
you get. Yeah, so go straight, be practicing with every single thing I've taught you. All our syllables are covered already. All our syllables are covered. So it's just your questions now that I need during the remaining days of this training before the 2 months elapses. Is your questions I need. All right. So whatever you find difficult, anything you find difficult, even if it's the psychology, you're still dealing with it, don't hesitate to ask me in a group. That is why I'm still available for you guys till this 2 months elapses. All right. So yeah, that's just it. Mr. Godfrey, you're having a bad network issue.
Okay. My network is bad, really bad.
Really, really bad. Really, really bad.
Really, really bad. Yes, really bad. Mr. Tim, I thought probably since we're done with our syllabus, like even if maybe in a week or thereabout, maybe like twice in a week, we can actually look at an asset. All right, during the week, probably just do a live forecast.
Okay.
How do you see that? Like, let's just do a live forecast together, you and the students as well. Yes, like maybe an asset that you are looking forward to probably trading the next day or thereabout. They will just do the analysis together. They will see the approach in which
Okay.
from there we can be able to learn just like a practical section.
Okay. Okay.
Yeah, that's my own idea. I don't know.
Yeah. All right. We're gonna do that. We're gonna do that. We're gonna do that. That's a nice suggestion. All right. So when we cover all the syllabus completely, tomorrow we're dealing with Profen. So once we cover all the syllabus completely, we're gonna be doing that once in a while.
Yes.
Yeah, maybe nights like this, we just run analysis, predict where it might likely go, and then the following day, everybody will be watching out for it and see how it goes. You understand?
Yes.
All right, no problem. So traders, that's all for we've got tonight for your trading psychology. So make sure you deal with it as I taught you, and I hope
Yeah.
I wish you all the best in your trading journey. All right, wish you all the best
All
in your
right.
trading journey.
Thank you.
All right. So please, the chat group
Exactly.
was created for analysis. So you guys should stop keeping it
Exactly.
quiet. You guys should stop keeping the chat group silent. I want to see traders dropping analysis like this. Look what I'm looking at today. What are you guys looking at? Anybody on GJ? Is anybody looking at UG? Is anybody watching Euro USD? You know, that's how active the group ought to be. All right. So you guys should start your analysis and start this journey, start the journey. You understand? Don't continue to want to do it on your own. Drop your analysis in the group. Let ideas come forth. You understand? That is how you see yourself win and win together. All right. So
All right,
traders,
sir.
for the meantime, make sure you stay safe and keep winning. I remain your one and only Forex skill coach, Team Legend. Good night.
Good night, sir. Thank you.
Thank you very much.